Hi, everybody. It's Jessica Stone at Stansberry Research, and we're joined now by the Director of Research at Stansberry, Austin Root. And Austin, I've been reading about these instances of people who don't want to go back to work, who've been furloughed because the benefits of unemployment right now are pretty good. And obviously, we just got some numbers in. We know that about 10% of the population is living on unemployment. And in some cases, it just doesn't make economic sense for them to return. What does that portend for the economic recovery of this country?
It's a real issue. So there are many cases where our workers or our prior workers that are now on unemployment can generate more income, at least in the short term, by not working than they would going back to work. Those are special government programs that have added those extra benefits. Those are set to run out in July. Mm-hmm. So while it's an issue, I just want to level set and say it's not a huge issue.
For the companies who are having trouble attracting people off of furlough or off of unemployment, do you foresee additional incentives? Do you see some impact to their bottom lines as a result, or their stock values? How do you think all that plays out?
Yes, I think that they will, in some cases, have to make the job more attractive, make folks realize that they're being short-term focused in terms of thinking about, well, I can make a little more money being unemployed now. And maybe sort of create incentives to say, look, enjoy some of the fruits of our overall labor by enticing them to take stock. Mm-hmm. As the overall company grows, so too can you grow with us. The other pieces that you asked about, though, are just as big for me. You know, we have an economy, $22 trillion of gross domestic product that's created in the U.S. last year. Mm-hmm. 70% of that was driven by consumer spending.
Yeah, we got to spend.
We got to spend.
That's why they're giving us the money, right?
That's right. And it's important. I do not. So you asked about the impact on stock prices. I think investors should look through 2020. 2020 earnings and 2020 GDP levels are going to be abysmal. And I'm not in the camp that it's going to be a quick V-shaped recovery. But I do think as you look longer term, there will be some companies that will generate some really world-class earnings and stock price moves on the back of this as you look forward. Having said that, Jessica, I think that some of these companies are going to realize that they can do it with a smaller workforce. So I do not expect, and I think that being a little public with that maybe can encourage some of these people to come back, that they're worried that, you know, they don't want to be one of those long-term unemployed.
Sure. That's a really good point. Who are the winners and losers when you talk about how to invest in this environment, companies that benefit versus don't benefit?
What we want to do is, as I mentioned before, look past 2020 earnings and really even in most cases look past 2021 earnings. But what we want to do is think of those companies and invest in those companies that are at least, that we believe, once we get even out a little further, their business is at least as good as it was pre-coronavirus.
And how long do you give them to get to that point in your mind? You give them the full year and a half, 2 years to basically get back to where they were before this happened?
Yes, and that's the challenge, because of the value of a company, generally speaking, is the present value of all its future cash flows. Mm-hmm. And so we're really hampering those current cash flows quite a bit. But there are plenty of companies that we think that long-term earnings picture is not impaired at all. And in fact, in some cases is doing really well. So the simple answer is we're looking long-term and trying to identify those winners. And there's some obvious ones. On the good companies, we're looking at insurance companies. So property and casualty insurance actually will be more important coming out of this than before. They may have some claims issues in the near term. They reinvest their premiums that they receive. And as you and I have been talking about, interest rates are low. Yeah. So for the near term, the profits and the income they can generate on those reinvest those premiums is lower, but long term it's still a world-class business, and the best underwriters will actually have a bigger share of the market long term.
Okay.
And then quickly on the other side of that, I think that there are some restaurants that are really challenged in this new environment, particularly if you run a large square footage operation, if your food does not travel well, like seafood or steaks, if you have a lot of debt and you've relied on your business with low margins, but you just kept the restaurant really, really full.
Yeah.
Gosh, I do not see those businesses coming back in any profitable way in at least 2 years.
Thanks so much for joining us, Austin. And if you would like to see much more content just like this, please do subscribe to our YouTube channel. You can also find us on Facebook, Twitter, or Instagram. That's all for now. Thanks for watching.